Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome again to another video. So once again, to guys who are new, welcome to the channel. This is the Greedy Trader channel where I tell you all things market profile. If you haven't seen any of my videos, just go back to the channel and watch them, and then you'll see what it is we do here. Now, of course, I was laughing because I just remembered how often I have to do this intro, because people who have not been watching the channel are probably going to run into this video as their first video, and I kind of have to do this intro all over again. And I was just thinking to myself, no, not again. Anyway guys, welcome aboard. For those of you who've been following me for a while, then like I said, this is just another video. Alright guys, so what are we looking at today? Alright, I just figured that I'd jump on very quickly to talk to you guys about what's been going on right now, because it's something that I've been talking about. And for those of you guys who listen to me, I guess I just gave you free money, right? I just gave you an opportunity to jump onto a trade. Now, what do I mean? So right now we're looking at the Aussie dollar, right? And we are long the Aussie dollar, P&L on the screen. Now, again, you know, I'm trying to teach people here that you don't need to trade like an immense amount of capital in order to make money. And as you can see, I'm trading right now really small sizes, and as you can see, I'm doing fairly well. And when we think about it relative to the margin I'm allocated and the capital I'm using, right? So again, it's just important to kind of highlight that. So as you can see on my P&L, I'm literally using up like $1,400 worth of margin. That's it, right? Literally. So it's irrelevant how much capital I have. It's as long as I'm willing to, as long as I have 40, well, I would say at least to trade this kind of size, double the existing margin, it means I can hold the position and hold it comfortably. So if I had a $3,000 account, for example, it means that I could hold a $1,400 margin allocation, and I still have capital on the side, so I'm not really worried about any kind of black swan type event. Well, at least a black swan event wiping me out, right? Because I'm very properly leveraged. You will also notice that you know, my position sizes are relatively small, and I'm diversified across a few assets. While some of these positions, granted, are correlated, but we'll soon talk about the logic of why I'm in these trades, right? So again, I think I just want to highlight to people that, you know, again, I've said this time and time again, I'm trading weekly profiles, right? These are long, it's given me a macro view, but being able to execute within the shorter term window, as I like to say, is that I'm looking at weekly profiles, which is almost the same thing as looking at weekly charts, which means I have a very good grip on what the macro is doing, and I'm yet letting volatility make my money for me, right? And that's what I say. The people who don't understand why it's important to trade charts like weekly and monthly charts, especially for your macro direction and your execution, if you're using something like market profile, is going to be within an intraday window, right? You're literally going to see to the tick against the week where you want to enter, right? Which means you're going to have a very good risk reward trade, as you can see from our P&L and our positioning, right? So again, think about what we said about the Aussie dollar, right? Now, we were long from about here, right? So trading to bids, we saw the move, we saw the rejection in W period, and we were ready to get long, right? This is against a weekly profile. Now, risk allocation wise, you can clearly see where all the risk points is, the gap in value, where bids are stacking. So it's really easy for me to allocate risk against what I can see on my profile, right? So this is that super important, right? So again, it's not about trading intraday short-term charts all the time. It's also been knowing how to position against coming volatility. Now, talking about volatility. Now you would notice I've got my money flow index on the screen, and this is something I brought into the YouTube videos because I really wanted people to understand that this is no ordinary type indicator. This is not a typical sort of overbought, oversold type of tool. This is very similar to looking at your commitment to traders report, although that's a little bit more reported data, so it's actual data. This is more looking at how the volume allocated to your asset interacts with the price. So if you're looking at your volume, you can see how the money flow, which is a derivative of volume, reacts to the price, right? So what does that tell me? It tells me where traders are more likely to get squeezed, and then I look for confirmation of that in the price action. So it's not like a blind, I'm in a squeeze area, and then you jump in, because you can stay in a squeeze area for quite a long time, but the price will tell you when traders actually are squeezed. And that's the importance of market profile. So by combining this information, we get a lot of data, right? And also, it's not always, remember, we only get maybe a major squeeze like once a year. So if you want to trade and understand the squeeze points that we get when we look at money flow, then you have to understand how to read a money flow, right? So it's not a question of just saying, oh, it's an overbought, oversold, the usual bollocks that you hear. It's nothing to do with that. You need to know where traders were squeezed historically and how that relates to price action right now. So going back to what we were talking about, the odds dot, we had like perfect confirmation. We knew where the major squeeze zone was, and as we were trading into that, we knew we needed to get long, right? And now we're in a place where price is going higher and the money flow is going lower. We're divergent, right? Which means that if we pop, so let's say price was to pop to the downside and trade in the bids, we're going to find the money flow will go deeper into squeeze territory historically, which means that we can now look for confirmation of bids whether we're going to go for a bigger upside move, or if we pop to the upside, right, and we hit offers and we trade into a price squeeze level, we can then look for the reaction there, because we might get a minor short-term pop, and then we look for the squeeze in the to the downside, right? So what are we doing? We are consistently looking for areas where traders are squeezed. I consistently say this, is that money in the markets is only made when others fuck up, basically. There's nothing else to it. So if it doesn't matter if they're institutions, they're retail, if they fuck up, you're going to see it in the direction of what kind of squeeze are you getting. Now, if you're using real data like a COT report, for example, and you're trading commodities, in fact, it's even clearer to see where the money managers are, where they're positioned, and where they're going to get squeezed. It was one of the points we made about the S&P 500, and to no surprise, look where we are, guys. You know, again, this stuff is, for me, it's just like, it's not hard. It's people's willingness to accept what reality is that institutions only make money when lots and lots of traders are wrong. And because if you work in a bank, you can see both sides of the order flow, so you know where all the sellers are and all the buyers are, and the moment you realize that they're too long or too short, you squeeze them out of the trades, right? So essentially they just fucking up. They're buying the top of the market or they're selling the bottom, and and they're doing it based on some idea or something that someone's taught them, and they're not realizing that the sum of the game is to know where traders are squeezed. That's it. There's nothing else to it, guys. But anyway, for another video. But I wanted you guys to realize, okay, look where we are now with the Aussie. We're trading into offers, right? We're looking for a reaction, but we can see clearly we're not in anywhere near squeeze territory. So my thoughts is that we might get some inefficiencies. So say we close the week a little bit higher, we might get some inefficiencies wherein we might fill gaps, for example, and so on. But I think this market is in a long-term macro bullish framework, right? So that's how we see the Aussie. We see a similar picture for crude oil. We've been talking about this for a few weeks, and we can actually see, where that squeeze level was with crude. We got that responsive buy, and we can see how that corresponds, right? So when we had the squeeze, we were divergent, and then we came back to the squeeze level, and then look what happened, right? So we were very, very bullish when we had the first reaction, but then we went into a few weeks of a slump, and we thought, you know what, we might get a further dip to the downside. Let's leave crude on the sidelines. But again, some of you might have watched it and said, and actually, you make a good point. I'm going to stay long crude because I think the risk is under the S period dink, and from what we see here, ultimately is, well, it worked out in a nutshell. So again, just some of the points that we kind of hammer home really. Of course, we've always voiced we're bullish on the S&P 500, for example. Even despite the downside, we said, look, we're trading in the bids. Let's see what happens. This market is incredibly bullish on the macro framework. It may well be go high. In fact, I'm so bullish on the S&P that even if there were dips, right now we're really close to squeeze territory, and we are seeing a divergence here. Money's flowing out, so we would expect at some point a dip. Now the key becomes, with the S&P, we don't get major moves into squeeze territory. We just don't, right? It's the S&P 500, for God's sake. So where we are now, I think, is a local top, and we're probably going to trade lower. We've got an inefficiency, a gap in value. We've got bids down here. So I would think by the time we get to 4295, if we cascade, it'll be a few weeks of bear territory, but I'm pretty sure we'll start to get really tight on the money flow side. So we'll see how that goes. Again, we said this about gold. Gold, as you can see, is extremely, again, when you look at the historical squeeze levels, and remember, guys, the money flow is consistent with squeezes, right? We're going back to 2013 here in terms of squeeze levels, right? And we can see we already had a major squeeze level into 2023 on the bull side. Obviously, you can see all the activity here. We can see that S period move, and then now we're down, right? And I was saying that we moved really quickly in close to squeeze territory in the same year. I think gold was definitely, for me, trading off bids was a good long position. And I said, look, we're going to take this at least into offers. It's all going to be down to how the offers fare at 1960 and 54. I mean, we got offers stacked all the way to 2000, right? And I'm long-term bullish on gold. I think gold has a really bullish macro framework. So once again, seeing what we're seeing now is no surprise to me. What I'm looking at now is how do the offers react? I mean, for where we are right now, I mean, if we think about any sort of local tops, I mean, we're nowhere near. So who knows? We could get a really strong move in gold. But again, this was a trade that we didn't take part in. As you can see, we were more on the cable side and the Australian side. We thought this offered the best potential for volatility. And again, it's just all because of our understanding of how things work. And guys, I mean, we said it, like cable's going to run. And as you can see, we're long cable. Basically, it's accounting for a lot of our P&L, because I mean, it was just, for me, where we were trading, it was just perfect, right? And we talk about this all the time. Just follow the money, guys. I can't say it enough. Follow the money. Dollar yen, we call this clean. I mean, look at all the stuff going on here. I mean, then we had a big water flow. We saw this way up at 143. We didn't get on the short side for the dollar, to be fair. Dollar yen, we thought, well, yeah, we're going for a fourth wave dink, and we are likely going to trade into bids, which we have. No reaction. We're cutting through them. My thoughts are, look, we got a gap in value. 135 now seems a lot more likely. Into next week, we might have some seesaws. We're extreme. Look at that, right? We're in extreme squeeze territory, right? We haven't been here. This is the first squeeze of the year, and this is going to make for the major downside for dollar yen. I think when we start to find those bids, right, and we start to see a little bit more money flow agreeing with this, then I think we have a good opportunity to walk back to the upside. I do think we could get a pretty strong move, again, dollar yen to the upside. But we need to first see what goes on here. As you can see, we're wiping out bids. I think really what we're staring at now is the 135, 134 bid level. Dollar CAD, we're reacting here. Really interesting. Whether this is long or short term, we've been very tight on dollar CAD. I think, again, we moved up too quickly. I did say that. I said, look, with the money flow, we're diverging a little bit, right? So we've had a deep run. We've seemed to hit some kind of downside, and then we moved up too quickly, right? So you can see the buy. We move up, we retest those lows, but we're not seeing price follow through. So the question remains that we need to first see the money flow out. And I think we might get a good reaction, dollar CAD. I think we were really low, but I think we need to retest those downsides a little bit. But we're not seeing that, so it's quite strong. If we imagine we top out here, right, and this price is hanging about here, I mean, that's going to be crazy. I mean, because right now we will be saying, well, there's no one technically long, right? So there's some kind of accumulation happening if we're seeing that money flow go and it's not going anywhere, right? So something's going on here, and it could either mean we're going to fall off a cliff, dollar CAD, it's just going to be aggressive, because we're hitting into what we would consider to be a squeeze territory. I need to pay a lot more attention to this one, to be honest. This has really come on my radar. We should be seeing a bit of a stronger move. Dollar CAD, we got a gap in value here, so we know that needs to get filled. So I think what we need to see further is a development of bids. If we can get, we're getting a strong reaction queue period coming out of the bids to the downside, so you can see that here. If we can hold that and not trade out Q, then I think this becomes a very interesting opportunity, because we will head very, very quickly to fill the upside. So I'm watching this one. Because, to be honest, based on positioning, you would arguably say that there are a lot of traders long at the moment, and we should see that follow through. So dollar CAD is a bit conflicting, I think, relative to what's going on with the other asset classes. Bitcoin's also very strange. I think you know, there's some kind of squeeze happening here. We can see this huge push to the downside, but the price isn't going anywhere. So either we're going to get a chase to follow up, and then we're going to get squeezed really quickly for the sellers, and that's why it tells you something, guys. It tells you that Bitcoin is bullish. It tells you Bitcoin is in a long-term macro bullish framework. If we're chucking this much money out of the asset into squeeze territory, and we're doing very little price movement. So if we were to trade above L period, I think if we can sit and hold the week, or even come in the next week and do a bullish run into 31k, I think we get a squeeze. Right? It'll be massive, because there's so many people short and it's not going anywhere. So in my opinion, traders are too short. We're going to see a squeeze. Now, if we move to the downside, it will push us further into squeeze territory, and I think either way, we should either get hit by the minus development between R and S period this week, or, you know, I mean, I just can't see us getting back to 26k. You know, there's a lot of stuff going on here, but I think this could all result in a squeeze to the upside. So let's see. There's just, for me, there's just not enough there. I mean, we are trading. We did a bit of a, what I think was a liquidity hunt, but it's not played through in price movement, right? And the money flow was clearly there. So there were a lot of sellers, guys. You can see it. So I think this is the squeeze of the year for me, for Bitcoin, and it's done basically. And that was the downward we saw here. I think it should have been apparent to everybody at that point that, yeah, there's a bit of a problem. So yeah, I think I'm super bullish Bitcoin. Yeah, and sterling yen, similar to dollar yen, we call this, it was a bit even heavier on sterling yen, gap in value. This was a sort of a trade, you know, and I think we could eat some more downside equally. But again, look where we are, guys. This is the big, this is the squeeze areas of the year. I'm still relatively bullish on sterling yen. I think this is just going to be a case where we come down, squeeze the shorts out, and then go back up. And let's see if we can trade above and hit sort of 180. Well, I was projecting 200, you know, by the end of the year. But let's see what happens. But guys, we don't just trade out of, you know, we all have opinions. I don't ever trade my opinions. I tend to look at the price action. And again, when we settled up here, it was a clear short, but it didn't make sense overweighting my portfolio. I have already a lot of allocation against the dollar. So again, something like sterling yen is just really a correlated trade to cables. So you don't want to overcorrelate yourself. Well, hopefully you enjoyed this session. I think it was a bit of a teach, really. I spoke a lot about it, but I think I really wanted to hammer home the squeeze, the importance of observing squeeze levels and working with that. There's a lot more to it, of course, and this is something we can help you with, guys. You know, just go to the Discord server, you know, ask questions, DM me. I can help you, basically. It's not, what else can I say? I can help you guys stay profitable, which I think is what everyone wants to do. But anyway, guys, to my next video. Adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?